Oh, okay. Hold on a second, guys. Twitter giving me a hard time. Okay, here we go. Hey, all right. Hey, hold on. Let me adjust this. Thanks for your patience, guys. You know how this goes. Anyway, hey, welcome. Thank you for joining my stream. My name is Mark Principato, Mark P Markets, and thanks for joining my Bitcoin video analysis. So, hold on. All right. So, obviously, we have some interesting things going on here, and I have some interesting observations to share. So, if you're new to the stream, again, welcome. Here's what we're going to do. First, we're going to go over the economic calendar very quickly. Second, we're going to get into this Bitcoin chart and talk about what's reasonable to expect over the coming week. All right. And hopefully people aren't getting misled by a lot of this. Hold on. Having a hard time here. There we go. All right. So let me just, I am multicasting on TradingView. So TradingView people, if you can see me over there, great. You could say hello. All right, cool. Hey, there's Stian. And you need to refresh the browser. That usually solves the problem. Okay. Also, as a fun fact, if you'd like to share what city or what country you are from, that's always cool to see. I am streaming from the greater New York City area, also known as Northern New Jersey, right? In case you haven't figured that out yet. All right, so let me just show this real quick and we'll get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, real quick, I mean, speaking of Stian, let's say hello to a few of my regulars here. We got Alex, we got Stian, good to see you. All right, we got Kai, good to see you. James Rivera from London, Erdia. I remember that. Degen, good to see you guys. All right, thanks for joining me. By the way, if you're new to my community, all right, I have a Discord community. There's links in the description. You can check that out. You'll notice some links, some affiliate links. They're also in the description here. If you click on one and you fund an account at Bybit or at the other one, MEXC, and you actually place trades, Stian will get a small commission for the trades that you place, and that goes a long way to help the community because it supports him and it allows him to support the community. He's been doing some amazing work. Okay, we've been working together on putting a new website together. That's why I've been very occupied with other stuff, and I missed some interesting calls here, which we're going to talk about. But once I get that project done, then I'll be able to be more interactive with the community. So I apologize for that, but that's why I built the robot. Okay, the robot has made some decent calls. And by the way, speaking of the robot, we're going to be making another important update to that robot, which we haven't done yet. I've been testing some things, and it looks very good. The update is actually a more advanced filter, and that filter is going to reduce the number of bad trades, okay, even more, probably by about 50%. We have a trade history channel. You can actually see all the trades that the robot has taken. And one thing I have to say, though, is sometimes you'll see like a block of losing trades, like 5 or 6, particularly like in the coins, when you look at the coins, like the altcoins. But you have to realize that that is all the same trade. It's all going the same way. So like if one is called a long, they're all going to be called long. If one is called a short, they're all going to be called short, which also means if one stops out, they're all going to stop out. In reality, you would not take all 5 trades. You should only be taking one. Okay. Anyway, and if you're unsure, always trade on paper. Anyway. All right, so let's first get into that economic calendar. Now, sometimes I like to read it off to you. Sometimes I like you guys to read it off to me. You can use the TradingView economic calendar. You can use whichever one you want. But let me ask you guys, what is on the calendar for this week? Anything of interest? I like running through this exercise because this is something that you should do every single time to be just prepared for economic news, possibly quarterly reports from certain stocks, which over the next month, we're going to see a lot of reports coming out, okay? In fact, if you look at the trade scanner, whenever time it pulls out a stock, it gives you the date of the quarterly report. I saw a lot of them for November. So anyway, what do we have this week? Anything? Anyone want to guess? And it's okay if you get it wrong, or it's okay if you put something in there. Nothing this week, but next week is something else. Okay, right. We're only talking about this week. Stian says October 25, Fed Chair Powell speech. Okay, so that's just in 2 days, right? That's on Wednesday. Do you know what time that speech is? That usually when he speaks, it's usually sometimes it's at 10:30 a.m. Eastern time or at 2:30 p.m. Eastern time. That's important. Anything else? Right? Do we have any CPI reports? Any NFP reports? No. Any FOMC meetings? No. just Chairman Powell. PCE on Friday. Okay, that's for the U.S. because usually, sometimes you'll see for other countries, you'll see like CPI for Great Britain, or you'll see CPI for like whatever. The other countries don't really matter. I'm sorry. The U.S. ones matter because they're the ones that carry all the weight, and they're the ones that move markets. Okay, especially because we're talking about interest rates. Okay, 4:30 Powell. Thank you, Sam. Hey, Sam, good to see you. All right. Okay, cool. All right. Thanks, Kai. So it's not a very heavy calendar. All right. So that means, okay, cool. Not much to worry about as far as trades go in terms of surprise economic reports or surprise outcomes, because that's really all you're preparing for. It's to mitigate risk, not to place trades. All right. Let's talk about this chart now. By the way, I wrote my TradingView article yesterday, and I got a good response. Actually, they're selecting it for their picks or whatever. So that was nice of them. They don't do that very often, but it was. I got a notification from them saying that they were selecting it. So that's cool. But so that's whenever I write those articles, basically when I do my stream, I refer to a lot of the material in the article. So, and by the way, if you have any questions, members, you guys know who you are. Now would be a good time to put them in the channel. Also, this week, this is week 4 of October. You know what that means? Student meeting, right? So I'm probably going to schedule that meeting on Thursday, just for you guys who are students. I haven't scheduled it yet, but when I do, I'll put it in the appropriate channels and you guys can register for it. All right. Now, let's talk about Bitcoin, shall we? And I will make this chart bigger. So as we know, right, today's title is Rocket Ships and Rainbows or Just Another Squeeze. I know I'm trying to be more creative with my titles, right? Maybe I'll get some more views on this one. Maybe not. The rainbows may turn some people off. Anyway, so let's take a look what's going on here. In my article, as you see, I have a squiggle over here, right? I drew this. This is basically the scenario that I'm anticipating over the coming week. Now, I created this. I drew this yesterday, all right? And as you notice, my first leg was not bearish. My first leg was bullish. Now, we've gone beyond that, right? I mean, of course, it's not going to be right to the T, but I suspect this. This is a squeeze. This is not a bull market. How many of you, let me just ask you guys real quick, how many of you have seen title thumbnails on YouTube with rocket ships on them saying Bitcoin 40K? Anyone? Anyone see those? Now, here's why. First of all, I want to point out a few things. You have this level right here. Hey, Dom, how are you? Right? We've been here before. If you look back in July, we've been here. So this really is nothing to be that excited about. It's interesting because in recent time, we've seen a sharp move in a very short period of time. Now, another interesting thing, before I go over the actual trade setups that are here, this move started, the previous week on Monday, right? The previous Monday. And it was a result of fake news, from what I understand, right? CoinDesk came out with some news about the Bitcoin ETF, and it sparked this rally, right? Now, usually when there's fake news, we saw the pin bar that pretty much came the same day. Usually, if something rallies like on fake news, it usually returns back. It usually gives it all back because the news is fake. And I noticed over the couple of days, like, this thing isn't giving it back. What's up with that? Now, that whole idea about the fake news, you have to think about too. That's very telling. That's not a good thing. You realize those CoinDesk people, I know there's something about they apologized afterward. You realize that they could have taken a position knowing full well, especially if they had some sort of inside view on sentiment and recognized a large short population, they could basically just come out with the news. They know Bitcoin's going to squeeze. They're long, and sorry, we made a mistake. Meanwhile, they dump it on you, and that explains the tale. Anyway, that's perfectly legal in the Bitcoin world. But if that was a stock, okay, and they came out with a story about a stock that was false, and then whatever, you better believe the SEC would get involved, although they're not the most effective organization. But that would be a red flag for the SEC, right? In the Bitcoin world, it's not a red flag at all. It's not even a flag. So that's an important thing to keep in mind. They can play these games. You can buy an article for something like 2K. You can buy them all Right. So that's, while it's illegal in the stock world, it's not illegal here. Please keep that in mind. Okay. When you're dealing with Bitcoin and altcoins, please keep that in mind. The iShares Bitcoin Trust has been listed on, which clears NASDAQ trades. And the ticker is, again, all part of the process. Okay. All right. Hashdex also received. All right. So maybe this is part of the SEC. I'm sorry. The, that whole ETF thing. But no matter what, don't get caught up in the news because it doesn't matter. When we go to the bigger picture, this move is really not particularly significant when we look at this bigger picture. This is a weekly chart. Now you see this here? This is a weekly chart. All we've done is gone back to the range high. That is all we have done. All right. Now it looks very strong. It looks very promising, but we're still at the range high. So 31.5. Now, if we clear that and keep going, I'll be a little more impressed. But we have what? We have 31.5. What is this? 32.8 or basically 33. This is our resistance zone. And we're just poking into it now. Okay. So usually when you have a sharp move like this, it's interesting. The momentum is certainly bullish, but I would not be going crazy with longs here. Definitely not long. Let's go back to the daily chart. All right. So here's the thing. We're pushing the resistance. How do you deal with this? For one, you should only be thinking day trades. If you're getting involved, day trades, because it maybe it pushes to 31.5. Maybe it pushes to like 32 or something like that, right? If you're only looking for a couple of 100 points here and there, no problem. Your expectations are relatively small and you're not exposed to the broader risk. Swing trades here, on the other hand, are high risk. And investing here, you're a moron. If you're buying here a full position thinking, we're in the bull market now. This is a short squeeze, most likely. All right. A lot of shorts were short. They get squeezed. And this is what it looks like. Right. Now, there's another point that I'm going to make about that in a moment. But there's something else I want to point out here. I want to point out, how to work with something like this from the swing trade perspective, right? So let's say you're looking at a daily chart, and these are two trades that I should have called, but again, I'm occupied right now, so it's very hard for me to give these things attention. But whenever you see like a bullish movement, an initial movement like this right here, okay, the fake news move right there, and it's followed by inside bars, which is what you had here, inside bars. Inside bars are often continuation patterns, momentum continuation patterns. The robot wasn't able to pick that up because the market never pulled back far enough. Okay, the robot looks for pullbacks, but there has to be a certain amount of pullback. If the thing doesn't pull back, the robot's not going to pick it up. So the robot never called this long, by the way. This was your first potential long, which would have been a little, I would have considered that risky because you're right at this resistance area here, right? But there was an inside bar. Actually, there's three inside bars here, right? So the break of the most recent inside bar or the highest inside bar was a potential swing trade. I would have classified that as aggressive, all right? But it followed through if you had taken that. Of course, I could say this after the fact, but that was a valid setup. Here's another one, right? Inside bar right here. This was what, just the other day, inside bar. Again, even riskier because look where you are. I mean, you're getting right into like the 31K area, but that would have been worth something. So if you're willing to take those higher risk trades and you're willing to babysit them and you know where to put your take profits, then those are valid setups, okay? I would just classify them as aggressive because your location is way less than ideal. And location says a lot in this game. It speaks for a lot. So those are only opportunities that you had really setup-wise over the previous week or week and a half or whatever. Now, where we are now, again, all resistance here. So this is the worst place to be taking trades, worst place for longs. It's hard to take shorts here. I saw a lot of short sentiment, a lot of bearish sentiment. Like, oh yeah, this thing's going to pull back, blah, blah, blah. Obviously, people got caught in these tails and look, squeeze, right? So this is now the point. If you're going to take a short, this is where you want to look for the setup, but it's going to be risky, okay? Because again, you're fighting all of this momentum. So there's two ways to look at it, right? The short side, which is you're looking for the reversal pattern, right? You want to see basically in this area right here, you want to see a bearish pin bar develop. You want to see like a failed high develop, like maybe you get like an inside bar followed by like a failed high where it just goes a little higher. Okay. And then the next candle is red after that, like you get something like this. Okay. That is a possibility that you can see over the coming week. That would be an aggressive short because this momentum is bullish. If you were to take a short like that, I would not expect more than maybe retrace into this area right here, something like that midpoint there. That's a reasonable pullback because you better believe there's going to be a lot of people looking for longs. In fact, we get that type of pullback, the robot's going to be looking for a long too. Now, I drew this squiggle over here because I suspect that if this is just a run for safety and this is just a short squeeze, then chances are, we're going to see something more like this, a more dramatic pullback into the main support. And that's this area here, 28K to 27.5. That's the main support. All right. So I can tell you that the robot's probably going to be looking for longs here. It's probably going to be looking for longs in this area here. That's where the robot's going to be looking. But the robot is not always right. I always tell people you should also apply context. What I'm showing you right now on this chart is context. Okay. These inside bars were context, and that's where you could have spotted those opportunities. Now, so in terms of context, again, I would be looking here also for a potential setup, which may not go very far. It may not make the higher high, but there may be some swing trade opportunity in there. Or, this low over here, the 28K area, for a potential bounce back into this zone here, right? That's all. That's all you're looking for. Forget 40K. That's just, well, it's a possibility. I believe it's a very low probability. Now, let me explain why. Let me just see what some people are saying here. Okay. Okay. Hold on. Just going back. Let me just see what people are saying. All right, Bill, people realized how offsides they are, okay, for the coming of spot ETFs. I think we should be buying into this announcement. No. I don't agree with that one. You're getting caught up in the hype. 42K, no way. I just don't agree with that. I mean, you're allowed to have your opinion, of course. Historical monthly is called October. And that is okay, right? So ETF news. Now, here's the thing, though. I suspect I'm not buying that ETF news because, first of all, let's look at something here. All right, you guys are getting caught up in the hype. Let's look at this. So this right here is the bond market, right? Well, let's look at the US 10 yield because that's a little easier to understand than the bond prices. US 10Y, right? Let's take a look at this. So this is the US, the 10-year yield, okay? The interest rates. Now it's pulling back a little bit today. Okay, no big deal. But this trend is bullish, right? So unless this is the peak right here, unless this is the peak of interest rates, and by November, whatever, we're back to here and we're breaking supports on interest rates, then 40K becomes plausible. Okay, then that Bitcoin rally becomes plausible because now we have rates cooling off, rates coming off, and money getting cheaper. We need cheap money. As long as money is expensive like this, you realize these rates are much higher than they were like back in 2020 when we had like the 2020 to 2021 where we had the Bitcoin bull to 69K, right? Rates were actually much more favorable back in those days. Do you remember also what we got back in those days? Anyone from the US? Anyone remember what we were getting in the mail in those days? Because this is a key thing here. Anyone? The non-US people are probably not going to know what I'm talking about, but people from the US should know. Anyone? You need a better setup. Well, I wouldn't touch longs at this point, but no one. Who said that? Stimmies, yeah, Bill. So everyone in the U.S. was getting in 2021 or 20, like basically like it was like May 2021 or before that. I don't remember exactly. Everyone in the U.S. was getting money in the mail, right? The U.S. Treasury was mailing people stimulus checks, thousands of dollars. A lot of this money was not really, they were not in need of this money. It was an overreaction. So you had all that money sitting there too. What do you think people are going to do when they don't need the money? Oh, I'm going to buy altcoins with it, right? So we had 0 interest rates plus people getting checks in the mail. Where do you think that money is going to go? I don't see any checks right now. Have you gotten any checks in the mail recently? I haven't. So what is going to carry Bitcoin? Just the idea of an ETF? Because, oh, there's going to be all this demand. I'm not buying it. No way. I'm not buying it, because in order to have that, okay, we need cheap money. Please tell me where the cheap money is coming from, right? Just because a spot ETF, sure, there'll be more demand, right? Obviously, it makes it easier for investors and this and that, but where's the money going to come from, right? Whether you're buying, Bitcoin outright, whether you're buying a spot ETF, where is the money going to come from? Funds are going to have to buy it, okay, but still, what's going to keep that going? Where is the cheap money? That is my question. Macro is bad, right? So the thing is, Bitcoin itself, right? It can be irrational, but there's no. I'm not going to say there's no way, because we have to keep an open mind. But I find it very hard to believe that this thing is going to go against interest rates when interest rates are king. All right, Bitcoin is not king. Interest rates are. I suspected that this was a flight, a run for safety. Okay, you guys are saying it's the ETF thing, but here's why I believe it was a run for safety. Let's take a look at gold real quick. XAU USD, right? Gold had a very similar move. What an interesting idea. Okay, now that move right there, gold usually, when people rush into gold like that, I mean, that's a pretty powerful move in just a few days, right? Less than 10 days or whatever that is, or something like that in gold. Why do people usually buy gold? Right? We have a rising dollar, we have rising rates. Gold theoretically should be weak. We have this on gold. Why? Right? Gold is usually a store of value. So I suspect that Bitcoin is also viewed as a store of value. So gold moving up like this tells me, right, that's a sign that this is basically what a run for safety of some kind, to protect against bank failures, global bank failures. I don't know. That's just my guess. Okay. Again, I don't make bets on stuff like that. That's just what I suspect when I see a move like this on gold. By the way, I wouldn't touch gold here. Look where you are, right? It's a resistance. If you're going to buy gold, you want to buy supports. Next support on something like gold is what? 1884? This area right here, right? On gold, something like that you're looking at. Maybe a little bit higher, maybe 19 even. Right now we're at 1972. You realize just a couple of weeks ago we were at 1810. So what's up with that? Okay, I suspect that's a run for safety, right? And when we go back to Bitcoin, Bitcoin looks very similar. All right, so if that's a run for safety, that's not a bull market. That's a run for safety. That's a short squeeze. We don't have the recipe in place for the asset bubble that you guys are talking about. So again, markets can be irrational for as long as they want, but I'm going here with the probability, right? Like if I was playing poker, I would view this as, I have a hand that has a low probability hand, and I'm just going to throw it away because I don't like low probability hands, although they can work. All right, if your cards happen to come out your way, as you know. So that's what I suspect here. Let me see what's going on here on TradingView. All right, so we got, hey, Miami CEO. I love Miami. Surreal, good to see you. People realize how off sides they are. Okay. Yeah, Milad, good to see you. How are you? Would love for you to review QQQ and SPY. All right, well, I'm not going to have time for that, or maybe I will, but I'm answering questions for members. If BTC and ETH break to the upside, what is the next level we can expect? Well, if Bitcoin breaks higher, obviously all these things are going to follow. Monetary expansion always moves speculative markets up, right? I remember. That's right. Okay, so I don't see monetary expansion. All I see is contraction. So Bitcoin is a speculative market. I don't know. The recipe isn't there. You know what? I would be more convinced of 41K. I would be more convinced if rates were more neutral, if rates were just like inside of its midpoint or something, but rates have made new highs, right? So that part to me is a big red flag. I had the same view back in December of 21, when the S&P was making new high after new high after new high. Bonds started selling off, and rates were still much more attractive. They were probably half as what they are now, and eventually it caught up to the stock market, right? So that's why I am very suspect of this. As an investor, I wouldn't go near this. Okay. If you had bought from lower prices and you're just sitting in it, okay, I wouldn't sell here either, right? But I wouldn't be buying here, not for investing. Swing trades, very risky, extremely risky. Day trades, possible, because day trades are small expectation and you're only looking for movements maybe like into this area here. Maybe we touch 32, maybe 33, maybe. But I suspect we're going to see trouble. And that's why this is the scenario I'm anticipating. I could be wrong, but that's what I'm anticipating. All right. Markets are random and there's no way to see the future with any degree of accuracy. If you believe otherwise, I don't know what to tell you. Okay. You'll find out the hard way. All right. So let's see. From 2020, Fed printed so much money. Right. Well, they are somewhere sitting. They created money 2020 and they mailed it out to everyone too, right? So you had you had zero interest rates and checks in the mail. You can't get any more stimulating than that. Okay. But since then, they've been reining in the money supply. They've been pulling it in by raising interest rates. I don't see Powell cutting rates yet. Okay. Or pausing. I haven't seen that yet. So I'm not buying it. I still think 82 is possible this year, as well as 30-point moves are common. I have seen, so I don't feel any FOMO right now. While it would be nice to allocate more, I won't. Right. I want to see supports. If you're thinking investing, you got to see supports, man. You need supports, something. And at least, or if you're not going to wait for a pullback, like maybe Bitcoin never goes back to 20K. Maybe it never goes there. All right. I'm not bearish. I understand something. I may say these pessimistic things, but I'm not a Bitcoin bear. But I follow interest rates, and that is extremely suspect to me. When I see moves like this, I just don't buy it. I just, I think it's a short squeeze, and I think it's temporary until I see the right environment that's going to carry this. That's why I'm not buying a bull market at all for these things. I know we get into an optimistic time of year, usually for the stock market around now. I mean, we saw the other day, right? The stock market was pretty ugly the other day. Let's go take a quick look at the S&P real quick, right? Look at this. This is the S&P, right? Usually this is when the stock market starts to find its holiday bottom, the Santa rally bottom. Maybe we get a double bottom here on the S&P. But what do we have there? We have like a doji type of pattern right there that's developing right now. The market's closing here in about 30 minutes. This is not exactly something to be excited about. Okay, it is a double bottom. There's no buy signal there. So, if you're taking trades here, right, for stocks, thinking long, if this bottom breaks, you're looking at another support at what? 40 and a half, something like that, maybe a little higher. How about 41 and a half, right around there? Something like that. That's what you're looking at. And this time of year is when you're supposed to see optimism developing in these markets, not sitting on their lows like that. So here's the NASDAQ, right? Trying to find this bottom. That's very interesting. Look how far this bottom goes. If that bottom breaks, that's not what you want to see. I mean, maybe we get a failed low, right? I find it hard to believe that this time of year we're just going to break and just completely, turn ugly here. I just find it hard to believe. Or maybe it shifts over a little bit. Maybe like second week in November we start the Santa rally. I don't know. But seasonally, that's usually what we see this time of year. And we are at these support levels. So when it comes to stocks, I wouldn't be going nuts shorting into these supports. It's highly aggressive. Again, unless you're taking day trades, possible area for swing trade longs. This is the kind of setup you want to see. If you're dealing with Bitcoin as a swing trade, this is what you want to see. Something like this, right? We have nothing like this on Bitcoin. Bitcoin's sitting on its high. So, extremely vulnerable. Anyway, all right. So let me see what kind of questions I got here real quick. You guys are usually on point. All right. So, Miami. So the QQQ and SPY, I just went over those, but instead of I looked at the index themselves. I mean in the beginning of the. Oh, okay. All right. So let me take a look over here. What are you guys saying? I'm bullish for a significant rally because there will be bid incoming with ETFs. Okay. The bull run requires cheap money both for retail and institutions to go. Right. That's true. But with rates this high, institutions are going to go nuts. I usually they're the ones that hold back because they're the ones that usually know better, right? So I don't know. I'm not buying it. BTC miners, not to mention we're up 80% year to date. What is that? What are you talking about? 80% on what? In my opinion, 40K is not this. Is not some crazy moon boy target. It is very well. I don't. You guys are all optimistic about it. I'm just sorry. I'm not. There's no way. I just don't see it because, first of all, it's not going to go in a straight line. Okay, that is for sure. Let's see, where is 40K on this chart? Let's go to a weekly chart real quick, right? Let's just put 40K on the chart, and let's see what's there in that area. So 40K is up here, right? So let's see what we got. 40K. This is 40K, okay? This is going to be tough to reach. And look where we are. That's 40K up there. We got all of this. Look at this. Look at this. All of this. This is old support, okay? That means there's probably a lot of people long in there that are still long and that will be happy to break even. What is this area here? 34 half. What is this? Low 36.2, something like that. I mean, so there's going to be a lot of trouble in that area. I don't think it's going to be a nice clean move to 40K. I mean, look, maybe you guys are right. I wouldn't bet on it. Okay, I certainly, if I was long, I don't have any Bitcoin right now as an investment because we've just never gone back to levels attractive enough. But if I was long, I wouldn't do anything now. I would just hold. There's nothing to do here, right? I wouldn't add to it because this is a highly vulnerable area. I never add in situations like this. This could be a breakout, but I'd be, like I said, I'd be more convinced if we had the bonds on our side, and we just don't. And the Fed is not on our side. So I don't know. I just don't see it. And by the way, you guys forget that Bitcoin is not exactly welcome in the global financial system to begin with. You guys, don't lose sight of that. There's a lot of people that would prefer Bitcoin not be so good, right? I mean, you have people like Gary Gensler. You have people like, the World Economic Forum. You think they like this? Do you think that they approve of this? So there may be, Gensler's tried to stop those ETFs. Obviously, he failed, but just keep in mind, Bitcoin is not welcome. All right, just keep that in mind. So anyway, all right. I would take 50% profit at 35.5. Okay. Well, if you're taking profits off of highs, there's nothing wrong with that. I'm just saying, don't be fooled and just be cautious. We are at a very vulnerable area. And this squiggle on my chart, I wouldn't be surprised if we're looking at something like this. Now, again, I'm not expecting Bitcoin to go to 15K or anything like that, because if it stays inside this range, it's just a consolidation. This is not a trend yet on the bigger picture. Not yet, or I should say the midterm picture. It's a range high is all it is, just like gold, okay? I'm going to show you this example real quick. XAU USD, okay? Gold, if we go to a weekly chart, for the longest time, look at these moves in gold. This goes back a number of years, right? We have a range low on gold and a range high on gold. You see that? So whenever gold had this massive move, right? What is this? 2020? What is this? 20 at the beginning of 2023, right? Everyone's like, gold's going to go to 5,000. Gold is still inside of its range. Okay. And a move like this is kind of, while in the short term, it looks significant. When you zoom out like this, it's not significant at all. So you can say, oh, but there's a higher low. Yeah, but this is not a trend on the bigger picture yet. It's not a trend. I should say midterm. Bigger picture, yeah, bullish. It's just a consolidation, right? On the big picture, going back years. This is just a consolidation. But we're still in it. And until we break out of it, I suspect we're going to be in it. And what's going to drive gold? Anyway, right? What's going to drive gold? And why do gold and Bitcoin both have this rally going on at the same time? Anyone want to give me an idea as to that one? And let's just take a look at the dollar index real quick. All right, so DXY and dollar index consolidating, right? Consolidating because we need the yields to continue higher, right? So this is going to be sensitive to the bond yields. This does not exactly look bearish to me yet. Okay, it's trying to be bearish, but this is not a trend reversal. This could just be a consolidation, right? So keep that in mind. If in a week or two, if we're talking about dollar and dollar is looking like that, you can forget your 40K. That's all I'm saying. All right. Bitcoin is not going anywhere without cheap money. And same for the altcoins. So don't be fooled. That's my message to you. Okay. No rocket ships and rainbows. It's just a short squeeze. Okay. Thoughts on BTC SPX chart? Okay. No, I'm not going to go over that now because I've been talking too long. It has in conflict drove the gold. Okay. So you're saying the geopolitical, right, drove gold. I suspected that. All right. I suspected that usually when there's some sort of geopolitical conflict, usually gold is a safety, right? People run for safety and they buy gold to protect the value of their money, right? If Bitcoin is being used for the same purpose, which I believe is, Bitcoin is viewed in a similar way, then we're just seeing a combination of too many shorts they're getting squeezed, too much ETF hype. All right, we've seen ETFs before. I mean, this is nonsense. I don't believe the ETF has that much of an effect in such an unfriendly environment. And then we have, a run for safety. So the combination of these things, remember, it's not just one catalyst. We're dealing with a collection of catalysts. So, we get that little extra squeeze, and everyone's all excited. Everyone is having parties and eating pizza and drawing rocket ships on their thumbnails. Really. I think don't get caught in that nonsense and that over exaggeration. All right. So I'm going to leave you with that. This is a highly vulnerable area. Don't be fooled. Lock in profits at levels like this. Consider day trades. That's probably going to be your most effective strategy because you won't be exposed to this level of risk. Unless of course you stop using stops, then you expose yourself to all the risk. All right, you guys. So, sorry, man. Yeah, I got it because I got to keep this. If I start answering questions, I only answer questions for members. If I start answering questions, then I'll be here all day, and I have to keep these short. To add 100 billion to an MCAP is not required. That 100 billion actually flow into the market. Okay, I'm just looking back here to see if I see any questions from. I don't see any student questions. If I missed your question, I apologize. All right, but you guys clear on that? So by the way, if you like the stream, please press the like button. Please press the subscribe button on YouTube. Please press the boost button over here on TradingView. Yeah, okay, cool. All right, that helps me out a lot. We have some, Alice has been clipping a lot of my older streams. So if you want to see some interesting clips, you could watch the YouTube channel. There's a lot of clips there. We have more stuff coming out on the way. And once I have more stuff that I can share with you, I will share it with you. All right, you guys. So again, thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you for watching.